This is Robert Kraft, and I'm your host on SNN.Network. And joining me right now is Dan Matlow. He is the CEO of VitalHub. It's a publicly traded company. The symbol is VHI on the TSX Venture. Dan, thank you for joining me today. How you doing?
Thanks for having me today, Robert.
For our audience, I'd love for just can you provide a quick overview and history of the company, and then we'll go from there.
We're in the growth space of the healthcare software IT space. We're a combination of a consolidator. We've done 8 acquisitions to date since our inception, but we've really grown nice organically off of some of those acquisitions. So COVID-19 has really accelerated the use of our solutions out in the marketplace. We predominantly have grown in Canada, but more importantly in the European, UK-based marketplace, where our solutions are really starting to rock and roll in those type of stuff. But the company, we've been around since about 2016. We've raised about 55 million in capital, and I've done 8 acquisitions to date. We focused on solutions that are really designed for what we call the patient flow, the patient journey based aspect of it. So the integration of cloud computing, mobile devices have really accelerated the use of engaging with patients outside of what we call the healthcare setting, being in the hospital, the other settings. So how can we do as much for that patient at home prior to coming into a big institutional-based setting? So the analogy I like to use is we used to go to the airport and check in. Now we do all that at home. We do all that work at home. So how do we do pre-assessments? How do we, before we come into hospital, how do we do appointment scheduling? How do we engage with that patient before and after that setting, before they come in there? And how do we as a hospital organizations really monitor that flow, the penetration level? Where do we see bottlenecks? Where to do those things? And we've really accumulated about 20-something solutions in that particular area. And it's used by about 500 healthcare organizations across 5 different countries, being Canada, UK, Australia, the Mideast, and so forth, that have really engulfed in those solutions. But our organic growth has been growing pretty rapidly. Since Q3, Q4, we're seeing a really strong Q1. The company does about 22 million in revenue, 75% of that being recurring in nature. So we're excited of those solutions for sure.
Very good. And Dan, so what would you say makes the company unique and different compared to your peers? I would assume because you're really focused on the entire patient journey. Am I correct?
Yeah, it's the entire patient journey, and it's really coming at it from 2 different areas. One is the view of the healthcare organization, the hospital, from analytics, but it's also the view of the patient. How can we do those things? So we built some really good solutions, but we've acquired and continued to acquire those base solutions. So we think we're really good operators. So I got 30 plus years of experience in healthcare IT. This is my 3rd venture, 2nd public venture. The prior one was a company called MedWorks, which was sold off in 2016 to private equity, Vista Equity Partners out of the US. For those didn't would probably understand that particular group. And then we started in VitalHub. When we've been an aggregator, we like this space. We like this opportunity, in terms of what we do. So we think it's unique. We're good capital allocators as well. So we know being public, you really need to be good capital allocators. We've raised 55 million in cash so far. We're still sitting on 27 million of cash. We're producing 20+% EBITDA as a company, aiming to go higher. We're producing cash. The money's all earmarked for acquisitions. It's not moved for operational. We're producing operational through our standard-based business. Yet we're only trading, at a market cap and enterprise value at about 75 million if you take the cash off the table sitting today. So 3.5 times revenue, 3.5 to 4 times revenue. If the company is doing 70% recurring and is growing its recurring revenue at a pretty fast clip. We're added, we were 13 million at the end of Q2, 13.5 million of AR at the end of Q3, 14.5 at the end of and above at the end of Q4. We're seeing the same trend. So we're adding significant high margin growth, ARR right now into what we're doing.
Very good. And Dan, give us kind of an overview of the competitive landscape. Who would you say are some of your closest competition out there?
Yeah, we're primarily based in the outside the government funded based healthcare world. So we're doing not lots in the US, and that's on purpose. There's a lot of other vendors. It's a really big enough ecosystem that venture capital and private equity based companies are handling that off. Although we will entertain that, but we really see just a bunch of piecemeal based small vendors, little vendors that really define to a particular geography that we do that. So our goal is to become the big gorilla in this space within that geographical based sector, government funded based healthcare in terms of patient flow, patient journey based software solutions.
Very good. And Dan, from what you can tell us, what would you then say is some of the company's value catalysts now moving forward?
I look at this from a three-pronged perspective, right? And that's what we're trying to do in terms of making our investors money. One is growing organically. Every dollar that we add to our organic growth is 85% margin. That's coming to that bottom line. So anything we can add organically, and we want to do that as cost effectively as perspective. So we don't need a big sales and marketing based group. We don't want to go into that stuff. So look for organic growth, and we're getting that. The second one is being acquisitions. We're buying companies, at between 2.5 times revenue, never higher than getting into 3 times recurring revenue. Yet we're trading at a 5-time recurring revenue, which we think is still light, but you're making that albatross of 2 times revenue right on every acquisition. So we're sitting on $27 million worth of cash, and we're going to add that by making more acquisitions, and we're for sure active in that space. The third thing is we have our own offshore development group in Sri Lanka, Colombo, Sri Lanka. It's our offshore development group. We think it's a cost-effective way to build software. So we think, with acquisitions, cost reductions, and so forth. So all proven in EBITDA. So you're looking for all three of those. Is what is our cost reduction? How are we doing there? Are we adding our organic growth, and are we adding acquisitions?
And with that, Dan, where can our audience go and find more information about VitalHub?
Go on our website, VitalHub.com. SEDAR is, the TSX-V is doing that. There's some really good customer case studies on our websites. We do webinars and so forth. Feel free to go on there and take a look. And for sure, you feel free to reach out to me if you have any questions. I'm always available. I'm publicly accessible through email or whatever, and be happy to respond to anyone anytime.
Very good. Well, Dan, thank you so much for joining me today. I really do appreciate it. Good luck. Stay safe.
Thanks, Robert.
I look forward to our next update.
Appreciate it. Bye-bye.